All right, fam. It's Thursday, August 14th, 2025. Bitcoin and Ethereum getting rejected and dropping. In this video, we're going to talk about why and break it down for you real simple. If you don't know, this is AJC, or Average Joe Crypto, where we break down crypto simply and easily for the average Joe to understand and bring you guys the straight alpha. And if that sounds good, don't forget to smash the like and, of course, hit that subscribe button, and we're going to jump right into it. So the crypto market's waking up a little hungover after some serious partying earlier this week. Bitcoin's down about 2%, sitting near $118,000 after smashing all-time highs above $124,000 just days ago. Ethereum, she's off around 3.7%, trading around $4,530 at the time of this video, after almost smacking that $4,800 all-time high. Today, I'm breaking down exactly what's going on, what's spooking the market, and what it means for us traders. First thing, macro pressure, inflation, and Fed hopes. So the first things first, this isn't just a crypto problem. We just got hotter than expected wholesale inflation numbers here in the US. And that's got Wall Street questioning whether the Fed is really going to cut interest rates anytime soon. Higher rates mean a stronger dollar. Tighter liquidity and risky assets like Bitcoin and Ethereum, they usually take the hit first. This is the same playbook we've seen before. Macro fear plus strong USD equals short-term selling. Typically, if you're in crypto right now, you can't ignore macro, because the big institutions buying Bitcoin and Ethereum are watching the exact same charts as the stock market traders. The second big factor, good old-fashioned profit taking. Let's be real, Bitcoin just ripped to a brand new all-time high above 124K. Ethereum's been on a 16% tear in just 5 days. If you're a fund manager sitting on 6 to 7 figure gains, this is where you take a little off the table. So profit taking is a big deal. And that doesn't mean the bull run is dead. Far from it, actually. But markets don't move in straight lines, and when you've got a pile of leveraged longs stacked up near the top, all it takes is one macro headline to trigger a wave of liquidations. Now, let's talk about Ethereum's unique story. Here's where it gets interesting. Ethereum's drop today is more of a shakeout than a breakdown. Why? Because under the hood, ETH has serious tailwinds, institutional ETF inflows, the upcoming Pectra upgrade, and an analyst calling for $15,000 ETH by the end of 2025. Some even say ETH could start challenging Bitcoin's dominance. But right now, those bullish narratives are getting drowned out by short-term fear. Smart money isn't panicking, they're just repositioning for better entries. Now, if we look at the charts, Bitcoin's testing that $118,000 support zone. That's a key level. Break it and we could see $115,000 or even $112,000 pretty quickly. For Ethereum, $4,500 is the line in the sand. Below that, $4,300 is the next support. Also worth noting, we saw a spike in futures liquidations early this morning. Over-leveraged longs got wiped out, adding fuel to the drop. That's why I always tell you, use stop losses, manage your risk, and don't go full degen unless you can afford to reload. Now let's not forget the big picture here. Look, corrections are part of the game, right? The ups and the downs. The macro picture is still bullish for crypto long term. We've got ETF flows, halving hype still in play, and adoption trends moving in the right direction. But bull markets climb a wall of worry, and right now inflation data is just the latest brick in that wall. The danger is letting a healthy pullback shake you out right before the next leg up. We've seen this movie before, and in the crypto cycle, the impatient money gets shaken out while the patient money loads up on discounts. For Bitcoin, watch $118,000 and $115,000. If we bounce, $121,000 is your first resistance, $124,000 for the retest, and for Ethereum, we need to hold $4,500 and you're good. Break $4,300 and we might be in for a deeper flush before the next run. Also keep an eye on tomorrow's macro data. Any hint of cooling inflation could flip this market bullish again in hours. So yeah, the market's red today, but this is where traders make their money, not lose it, right? Manage your risk, keep your powder dry, and remember, these dips don't last forever. If you found this breakdown useful, smash that like button, Drop a comment on what you're watching and subscribe so you never miss the next AJC market call or update. I'll see you guys in the next one. Let's get it.